What is the history behind financing home appliances? Imagine a time when buying a refrigerator or washing machine meant saving up 4 years or paying the full amount upfront. That was the reality before the idea of financing home appliances took hold. The story begins in the early 20th century when consumer credit was just starting to grow. Back then, most homes didn't have modern electrical appliances because they were expensive and credit options were limited. People simply couldn't afford to buy these big, costly items without saving for a long time. During the 1930s, the United States faced the Great Depression, which made buying anything a challenge. To help, the government created the Federal Housing Administration to stabilize the housing market and encourage home improvements. They introduced Title I loans, which allowed homeowners to borrow money specifically for upgrading their homes, like wiring for electricity. These loans usually had repayment periods of up to 5 years and lower interest rates, making it easier for families to afford appliances like radios, refrigerators, and air conditioners. At the same time, retail stores and finance companies started offering installment credit. This meant consumers could pay for appliances over time in smaller, manageable payments instead of one big lump sum. Layaway plans and time payment options became common, especially by the 1950s. Major companies like General Motors created financing divisions that worked with retailers to give customers credit. This made buying appliances much easier for families who didn't have enough cash upfront. The post-World War II economic boom pushed this trend even further. More families bought homes, incomes increased, and consumer credit options expanded. Stores began offering point-of-sale financing, which meant you could buy appliances directly from the store and pay over time. By the 1960s and 1970s, financing for home appliances was a standard part of shopping. Laws like the Truth in Lending Act helped make credit terms clearer, so customers knew exactly what they were signing up for. This shift in how people paid for appliances changed household life. Families no longer had to wait years to save for big purchases. They could buy refrigerators, washing machines, and stoves right away, spreading out the cost over months or years. Retailers benefited too, as more customers could buy more appliances, boosting sales. So, the history of financing home appliances is really about how credit evolved alongside the growth of consumer spending and housing. It started in the 1930s with government-backed loans and grew through the decades with new credit options. This made household appliances more accessible and affordable, shaping how families plan their budgets and make purchasing decisions today.